Hello traders, welcome back. On today's video, we'll be talking about a top-down analysis. Starting from the monthly time frame, weekly time frame, to the daily, and then to the hourly to frame a trade idea. Okay, please watch to the end of this video, and if you have not subscribed, please subscribe, like, and comment about what you thought on this video. Thank you. Now let's dive into the top-down analysis. Looking at the chart, this on the dollar index, you can see that price has been trading bullish for quite a few years right now. So if you are a swing trader, you will want to look at the monthly time frame. Using your fib level, you'll see that price is just making a retracement into this expansion, and we want to see price retrace at least into 50% of this expansion before we can frame a trade idea or get a confirmation to go bullish. Now what do we have here? We have an imbalance below our 50% of the Fibonacci retracement tool, and you can see that price is clearly trying to react off that imbalance. Okay, as a swing trader, you want to drop to the weekly time frame to get an entry, or to the daily time frame to see if you can get an entry. And this is a clean entry for someone who is trading on the monthly time frame. Okay, that we want to enter from this break of structure, right here, and then mostly targeting the high of this expansion. This is the high. If you go back to the monthly time frame, you see what I'm talking about. You can see this is the high this expansion has created, and then we're having a sort of retracement. This is in the monthly time frame. Okay, now we'll have to drop out to the weekly time frame. Also, for swing traders, you'll be able to spot a lot of opportunities right here, which I've talked about, having this break of structure, price retracing down, and then having this expansion, then retrace back, and also having this expansion. But as a trade trader, all you have to do in this case is to spot the order flow of price. Okay, this is on the weekly time frame. You'll see that price has a lot of significant liquidity. Price is trying to reach from this point. Now we have an imbalance here, which price is likely going to target. Overall, we are bullish from the weekly time frame, monthly time frame perspective. We are bullish, and also the weekly time frame perspective is telling us that we are clearly bullish as well. So as a day trader, I can trade in just one weekly time frame. I can frame all my trade ideas from this weekly time frame. I can frame mine from this weekly time frame. But overall, you need to know what price is saying. You need to know where price is heading. Okay, that is why we are going to talk about in the course of this video. Okay, where are possible liquidity areas that price is interested in? Like you all know, price is always seeking liquidity from one point to another. So from the weekly time frame, you just have to highlight the liquidity zones. We have one liquidity right in there. We have another right here, which price is almost close to. Then we have this one which price has already taken out. Okay, and then you see price has already closed above this liquidity area on the weekly time frame, which means that price is more likely going further, going bullish, I mean to say. Okay, let's drop down to the daily time frame. This is all the information we need from the weekly time frame, and then from the weekly to the monthly time frame. Sorry, from the monthly to the weekly time frame. So now all we have to do is to drop back into our daily time frame and see what is happening. Okay, we can see that price just traded into an old gap. Price traded into this gap. You have to train your eyes to be able to see some of these details, because they all matter in a top-down analysis. This is all what you need. you need to consider every piece of information to make sure you're making the right decision, because every wrong decision costs you $1. Every wrong decision, you're paying for that. Even if it is okay to lose, nobody still want to lose. Okay, it's very okay to lose, but definitely you don't want to lose. You don't want to lose. So that's a gap, an old gap which price just filled and then retraced back into the gap, and you see that price is trying to reject that gap. Now, as a day trader, this is what you're interested in. Okay, the recent liquidity areas and the current price trend. And then you can also see from the daily, we are clearly bullish, in line with the weekly and then in line with the monthly. So this is all you need. Okay, this is all you need for the top down analysis, in line with whatever strategy you are trading, a pattern trader, a breakout trader. This is all what you need. Okay, now let's go down to the 4-hour time frame to see if price is clearly giving us an entry to go bullish or to go bearish for some sort of retracement. Now, if you want a retracement, if you want to go bearish in this case, if you want to say, you make sure that price has taken up one of this expected liquidity from the higher time frame. This was the gap, and this is the next liquidity. Also this liquidity before this whole gap has to be filled. Okay, so we are just, this is just a potential zone where we're expecting price to drop. Price must just decide to crash even lower. Okay, this is just my analysis. Okay, so I'm not saying that price must come into this zone. Okay, but price is more likely to come into this zone if it's going to do what it's expected to do. So for you to get a selling opportunity in this case, you have to get a proper market structure shift. After price must have taken whichever liquidity, you have to get like a proper market structure shift, then you can short it to the next liquidity or internal range liquidity area. Then you keep doing that until you get another shift in market structure to the upside. This is basically what you do. Follow price flow. You don't trade against the price, you just have to follow price flow. Okay, this is basically how to do the top down analysis. Go to the higher time frame, get the direction of the price, then trade in line with the direction of the price. And also, the trend is your friend, but not when it's about to reverse. So you have to get to know some reversal point, like when price takes out an external range liquidity, price is bound to reverse a little before continuation. So you have to take note of that also. So guys, I hope you find some helpful tips on this video, and please like and subscribe. Thank you.